If you're starting to raise and you're not sure whether to pitch angel investors or venture capital firms, the difference between them isn't just about check size. It's about timing, connections, expectations, and control. So let's break down exactly how they work and which one's right for your stage. So what's the difference between an angel investor and a venture capitalist? And more importantly, which one is right for you? Angel investors are wealthy and accredited individuals. They invest their own money, usually in the earliest stages of a startup, often pre-seed or seed stage. They might be former founders, execs, or even just high net worth professionals. They're usually more strategic and are willing to answer your calls more than a VC. Or they might be a little bit more involved. And sometimes they write checks as small as $1,000 and upwards of $50,000 to $100,000 or more. They're betting early and personally on you. And angels move quickly. They're a bit more flexible, and they might be the first real money into your business. Now, venture capital or VC, on the other hand, is very different. So they invest other people's money, usually from limited partners like LPs, pension funds, institutions, and they're typically a lot larger checks, starting in the hundreds of thousands or even millions. So you'll hear some say our minimum check size is $1 million. That means if you're raising $750K, they're not even going to look at your deal. They usually come in at the seed stage or later. Their goal is generating big returns for the fund, typically over a 5 to 10 year timeline, if not sooner. And VCs tend to do a deeper due diligence. They'll often want a board seat, more regular updates, and a much bigger path to scaling faster. So which one is right for you? Here's a quick way to think about it. If you're just getting started, building your MVP, validating your product, or raising a small pre-seed round just to get some traction, angels are usually the best fit. So if you've got a bit of traction and you've got a full-time team, maybe a much bigger market opportunity, VCs might be interested in helping you scale faster. So sometimes they both work together. Angels can help you get off the ground. VCs are going to help you grow. So a few key differences to remember are angels are individuals, unless you have an angel group. VCs are firms with a fund. Angels are early believers. VCs are high growth focused partners. Angels are fast and flexible. VCs equal more structure. Neither is better, but they're just different roles at different stages. So please know that going the investor route isn't for everyone. Less than 2% of small businesses raise capital in the US. So it is not the determinant of being a good business either. If you're an early stage founder, start with angels at least before VCs, especially those who know your industry. And then when you're ready to scale and you've got real traction, be picky in going the venture capital route, and that's when it's going to start to make sense. If you're not ready for the investor route, check out my other video below on grants and how that can be your best first money in, even before an investor. If you're raising right now, choose your investors like you choose a relationship. Date them before you marry, aka give up equity.